All right, so it's the end of June. We are in full swing of summer. It is temperatures have been ranging up into the high 90s here in Greenville and the surrounding area. We've had some pretty wicked storms because of the heat, so it's definitely we are in full summer swing right now. And ultimately, I'm already ready for fall. So, but anyway, because it is the end of June, we're now literally like we're into the first half of the year is now complete. So with that, like I thought would be interesting is to kind of just take a look at overall performance within the real estate market here in the greater upstate. And specifically taking a look at a couple of different categories, because again, we're having discussions even as agents with each other in regards to certain listings. Why aren't they moving? What's going on? Market looks bad from maybe from a starter home perspective. There's a lot of anecdotal information that I kind of hear in conversation that I just thought would be interesting just to kind of break down and take a look at. Just to be able to, one, ease my mind, have a better understanding of what's going on. But the other is that I think that it would be beneficial to put this out just to kind of see at least my take from it. I'm not saying that I'm 100% accurate in any of this, but at least it gives me some general insight at a broad overview as to how certain segments of this market are moving. And, I really wanted to take a look at this week. I want to talk about single family homes, but I want to be able to take a look at different subsections within the market. So, we've got single family homes, we've got townhomes, condos, you have mobile homes, and then you have like lots and land or acreage that's on the market right now that's selling. And, each one of these categories, depending on what's going on with these categories and how many different listings are available, could potentially skew some of the data that's out there in regards to how our markets are moving overall. So really just wanted to take a look at, those four sections. And so I put this kind of, together. Obviously, we're recording this at the end of June, so it could, things could change in the next couple of days. I think it's the 27th today, but the idea is like just trying to get an idea of like where we stand. So, when we take a look at these right here, I've broken it down: single family, townhome, condo, the mobile home, and then lots and land. And what you can see, we've got a little over 4,300 active listings in the single family market. So far in June up to today, we've sold a little over 1,000 homes. Which gives us, if we take what's sold with what's active, then at that point you get your what you consider your month's supply. So we're sitting about 4 months of supply for single family homes with an average days on market around 42. And really, when you start breaking it down, there's some, depending on how like certain people will categorize, if it goes past a certain point. Are we in a seller's market, a neutral market, or a buyer's market? Typically, if it's like say 5 months or under, 6 months or under in these categories, then at that point you would be still kind of in a seller's market. And then outside of 6 months, you start moving into 6-7 months. You're moving into now a buyer's market, which for single family homes, I would say that we're still in a seller's market, but it's balanced. It's moving itself into kind of a neutral market. So obviously, like we've talked in the past, pricing is going to be still very important if you want to stand out in the crowd. But the idea is that the market in the single family is actually moving pretty well. Townhomes, condos, you've got 705 active listings. And so like in June, we've only sold 111. So you're averaging about almost 6.5 months worth of supply, which at 60 days on market, we're moving, I would say we would be moving into a buyer's market in this category. Still from a price perspective, you're looking at 439, almost 440,000 in single family homes. 300,000 for your $300,000 for your townhomes, condos. So prices are increasing or have moved up, but I wouldn't say they're dramatically different. But that the idea is that like it's still going to be very sticky, I would say, in the townhome condo market right now. because you've got a lot of listings in there. Mobile homes, you got 99 active. You had 42 sell in July. You're at a 2.36 month supply. This is a definite seller's market. They're moving very quickly. You can see 39 days on market, and they're selling just over about 200,000. So, the mobile home market is moving pretty well, and so at that point, like, it's one of the hottest markets right now, and it is because of the fact that, from an affordability standpoint, sitting over 200,000. The idea that it's affordable housing and that people are flocking to it, which I think is, the idea that there's availability out there is great. And then you take a look at your lots and land. Now, lots and land are, it could be a residential lot. It could be, really it could be categorized into a bunch of different things here. But there's there's like 1,360, almost 1,360 listings. We only sold 88 of those in June. So we're hovering like a 15 and a half month supply in lots and land. And the days on market is, 3-4 times above what the residential, what single family homes and the mobile home market are doing. And still almost over twice the amount of days from a townhome condo market. So there's a lot of land out there for sale right now with what I would say not a huge amount of buyers. So this is definitely a buyer's market. If you're looking for land, this would be a great opportunity to start taking a look at. But not all land is created equal. So the idea is that sometimes things can sit because of, like, it may not be seen, it may not be noticed. And if there's this many active listings, it's tough to stand out. So just kind of break that down to see that, market is moving. Things are going. There are some segments in this market that are definitely feeling more of the pain than others, but that the idea is that it's still moving. It's just now where are you going to be from a strategic perspective in order to be able to get things in front of people. So today, I just wanted to go into and break these down individually. I just want to look at single family homes. I'm not going to look at anything. I'm just breaking down single family homes, knowing that of what sold last month that we have a large percentage of what sold was single family homes. So obviously it's going to have a much broader effect across the market. If at the end of it, you've got, that basically it's a supreme seller right now, which just because of the fact that there's the availability is there. So I wanted to break it down into different price points because I think, the question that kind of keeps coming up is homes that are in, like the starter homes are really having a challenge right now. Like we're not, that first time home buyers are struggling because of interest rates, prices, those kinds of things. And I agree. Interest rates have definitely pushed people out of the market. Pricing has definitely pushed some buyers out of the market. I think that there's buyers that are sitting on the sidelines waiting for, say, the market to come down or for prices to come down. Or interest rates, those things, I think that it comes down to if interest rates come down, prices are going to come back up, just because of the fact that you'll see people jumping out of the sidelines to get in. But the idea that I think that there's also, is very much tied to affordability, right? So it could be easy to get, well, you're right. Nobody's buying homes. Nobody's doing anything. That at that point, like I could easily like get swayed into having a misconception of what's going on. So I just kind of wanted to break it down and say, okay, if the average price point of a single family home is $400,000, at that point, let's break these up into different categories. So, under 400,000, I would consider that's kind of the entry level, right? Encapsulates a large percentage of entry level buyers. Up to 800,000, 400 to 800,000 would be kind of like that next level of buyer, maybe second home, upsizers, those things. You start moving into 800,000 to say 1.2 million. That would be, I guess, classified as a luxury market. And then from 1.2 million and above, that we would start looking at what we consider ultra luxury. So I just kind of wanted to break these down and take a look at how are these properties moving. So as of when we put this together, up to 400,000, there was 4,353 listings that were active, right? In total. You have, of that, 2,476 of those is in that up to 400,000 range, sitting at just under 4 months worth of supply. And you've got 633 that are pending, another 692 that are contingent. What does that mean? That means that basically they're under contract. There's a contingency contract, something along those lines. So, you've got some homes that, even though it's not calculated in the sale of in the sold number, you've got quite a lot that's happening within that market, but still just under that 4 month supply, right? So, I would say it's that this market is in a seller's market, but that pricing would still be very sensitive. Because of the fact that this is probably going to be the biggest segment of the market that is affected by interest rates and affordability. As you start moving into your 400 to 800,000 range, you got 1,360 active listings. They're 4.3 months supply of homes. You move into your luxury market. There's 236 available listings. We're moving into the little over almost 5.5 months worth of supply. And your pendings and contingents are I would say they're pretty strong. And then when you start moving into your ultra luxury, your 1.2 million and above, you got 281 listings, a little over basically almost 8 months worth of supply. That you've got market that's moving. But this would definitely be more into that has moved into what I would consider a buyer's market. Honestly, it's just there's not a lot of people that can afford a $1.2 million and above. But the idea is that but there's a lot of people that are looking to try to sell them right now. So as you can see, that makes up our total listings are still 4,353. Our average month supply is hovering just over 4 months. And you've got a pretty healthy number of pendings and actives that are pendings and contingents that are happening right now. But if I just looked at that in aggregate and said, okay, well, we only got a 4 month supply. We're in a seller's market without really understanding how each one of these segments play together. It could be very misleading to look at these and say, okay, well, we're in a seller's market. Let's just go out and we can put whatever price we want on it and then and go there. So I wanted to take a look then at this point to say, all right, look, we've gone through COVID. We have gone through interest rates that were 3%. We have gone through, we're looking at an area where it's like, okay, interest rates have now gone up to 7. At one point, we were up almost to 8%. How bad is interest rates affecting our market? What was the COVID effect? Like, where did that affect? Where did it move? And then at that point to kind of take a look at where we are today, to give us a comparison now that we are kind of in this market now, where we've been pretty stable in regards to our interest rates over, say, at least the last, I would say, I don't know, like the last 5-6 months, we've been hovering in and around that 7%. So as you can see, in 2019, when we take a look at, we had in total, we sold almost a little over 13,000 in total volume. When you start moving into 2020, 2021, 2022, we saw a spike of homes definitely in 2021. Almost 2,500 homes that were sold in total. And then, we obviously felt that feel at the end of 2022 when interest rates started to come up. And then 2023 for sure, felt it, because that was kind of where there was a lot of things happening really quickly in the market that deterred people coming out. And then last year we sold just a little over 14,000 homes, 14,200 homes, if you will, roughly rounded up. And this year, this is a projected total. So all I'm doing is forecasting based off of what happens in July, August, September, and just adding those together. In essence, we're trending to be selling a little bit less than last year, but definitely by no means, we're not falling behind, say, what prior to the COVID situation. We're not falling behind into what I would consider historical home trends. We're actually doing pretty well. But what I really wanted to see was, how was the out of the units sold in each one of those years, what was the makeup of that? So, segmenting the market again, up to 400,000, the 400 to 800, the 8 to 1.2 million, and the 1.2 million and above. Where's going? Because when we start taking a look at our average single family home price, obviously the dilution of what is being sold and the dollar amounts that are being sold, one unit is not always the same. It's not, if I sell a $1.2 million property and a $4 million property, or $400,000 property, sorry. If I take that 1.6 divided by 2, the average is going to be 800,000. Well, that's not saying that we're at an 800,000 average price point. So it's really, for me, I want to take a look at each one of these subcategories to get a better understanding as to where things are going. Especially if, say, up to 400,000, your entry level. If all of a sudden prices have moved significantly that are over that 400,000, then I would expect to see a pretty big impact in this 400 to 800,000 area, just because at that point that buyer's moving into, or the market itself, the units sold are going to move into these price brackets and seeing where it is. Now, the other is, we can see, in 2019, the up to 400,000, we were sitting at just about 11,700 homes being sold. We saw a significant spike in 2020, 2021. And then, that's 2022, towards the end of 2022, I think it was August or September is when interest rates in 2022 started to move up, kind of push people out. 2023 definitely had an impact in this segment. And then you saw that 2024, there was a slight rebound. And this year, these are forecasted numbers that we're trending to be slightly under last year. But then I wanted to take a look at if we're not too far off the mark in regards to the number of units that are going to sell in this category, but what's happening here in this 400 to 800,000 range. You can see in 2019, we only sold 1,300 homes. Last year, we sold 3,600 homes in this price category. So almost, 3 times the amount of that. And this year, we're projected to go over slightly what we did last year in that. So even though we've seen an impact here in the under 400,000, the 400 to 800,000 is actually pretty healthy. Now, that doesn't mean that sellers are getting what they're asking for 100% of the time, but it's an interesting market. People are interested in if the price is right to be able to move. 800 to 1.2 million. Obviously, we've seen some pretty big. We've seen property values increase over time. So some of this is also too just because organically these properties moved out of the 600, 700,000 range into this 800 to 1.2 million. But that, in 2019, only 145 properties in that entire year sold in this price category. We're projecting this year to be 510. I mean, that's a significant jump. And depending on, where's the average in here, could have a significant impact in the average home sale price if I'm just looking at those numbers in aggregate. And then in your ultra luxury, you only had 46 properties sell in 2019. This year, we're projecting to do almost 350. So, you're still seeing some big movement within there. Obviously, too, when you're sitting on, almost 7.5 months worth of inventory, like we looked at in the previous slide, the idea is that there's also more availability, and that's making it possible to go. But this is definitely going to be an area. I would say your first time home buyer and your ultra luxury are going to be the two segments that are most impacted by interest rates. One, they're entering the market and they have to finance. Two, when you start moving into ultra luxury, the reality is, why tie up all that cash? I'm going to go and get a jumbo loan. But if the jumbo loan is hovering over 8%, it's going to be a deterrent. And so at that point, potentially you've got people that are willing to put their house on the market, but you've got a very small segment of the market that can afford it. And at that point, it's going to be very price sensitive. So anyway, looking at, in here, just, this is just a linear curve of what's happened. How are we looking? Units sold up to the 400,000 mark. You can see we're not back to where we were, from 2019. And I mean, the interest rates have definitely had an impact, but what you can see is that the average home sale price moving up from 216,000 on average. And now we're looking at a $285,000. So over the 6 years, I guess 7 years, you're seeing that, there's been almost a $65,000 increase in the average sale price within this category. You start moving into homes sold in between the 400,000 to 800,000 range. Some of this is just organic growth in your average home sale price. But the other is that, this is the market itself has stayed relatively consistent in terms of price point. Hold on, let me see if I can get this to actually show so when we started in 2019, the average price, this is units sold. Sorry. So total number of units here is that, we went from kind of a lower side. Now we're hovering to, this is probably one of the biggest segments in our market. So when we take a look at what that home sale price looks like, the average sale price in this category has fluctuated. Some of this could be the fact that there was, not a lot of inventory in the market, that this was, or that this is where people started jumping in kind of through that 2021 bubble or jump. And then we saw an impact with interest rates, but that even with interest rates being at 7%, you're seeing that the average home sale price within this category went from 513 to 523. Last year we were at 525, and this year we're hovering at 531. So we're seeing that that in this price category, it's continuing to move up. Compared to the up to 400,000 range. And so lots more happening here in regards to what sellers and buyers are having to negotiate to be able to get deals done. And then, so I think that this is pretty striking in terms of what's happening within this segment. When we start taking a look at how many homes are sold, obviously we went from 114 to the projected 510. But when we take a look at how the sale price in this $800,000 to $1.2 million price point is going, is that, you saw a significant amount of cash transferring within the market, between 2021 into 2023. Then you saw kind of a dip in terms of the average sale price within this. Last year, but this year coming back, we went from a 944 average to now sitting at a 955 average, which, that's pretty healthy. Then when we start taking a look at ultra luxury, this is the one that, obviously we've seen the units jump from, just under 50 to now over 350 projected. But when we start taking a look at our average price, we started at 1.52 million. As we stand now, we've jumped from 1.52 million to almost to a 1.93, which is a pretty significant jump in this ultra luxury side. But it's it's continuing to grow in terms of units sold. But again, there's a lot of inventory out there within this market. And so at that point, this is it's trending into a buyer's market, if not already there. So when we look at days on market, this is the other thing too. When we're like looking at historically, okay, well, what's happening? Why is there such a market slowdown? Like, why is this? Like, it seems like the brakes are coming off. Look, we went from an average in 2019 in these price points, 51.78 in the 400 to 800,000 range, 114 days in the 800 to 1.2 million, and 116 and 1.2 and above. And here we are. We've gone through obviously 2021 and into 2022. We started to see it even in 2020. But the idea that all of these were significantly lower through that time frame. But then, we're in this market slowdown. Interest rates have been, have just really deterred. But what I think is interesting is that it's just the data doesn't support all of this in that we're hovering today in 2025. As of today, we're at 50 days on market up to 400,000. Okay. Pretty much at par to where we were in 2019 when interest rates were 4%, maybe 5%. It was like 4.5 or something like that. The idea is that the other is that we were, there's no COVID. We've gone through COVID. We've done everything. I really wanted to go back to what happened before things went crazy and everything went upside down. That we're sitting at about the same days on market that we were back in 2019. So it's not that it's bad. It's just that it doesn't feel things aren't moving quite as fast as where they were. But that we're sitting almost like historical, from history, I should say, is showing that we are relatively close to what the market was. Same thing in the 400 to 800,000 range. We were at a 78 day in 2019. We're hovering at 49 days on market, which I think, it's still a very quick moving market. We've seen almost a little over 50% decrease in days on market in the 800 to $1.2 million range, and the same in the 1.2 and above. So it's not that things aren't moving, but when you do have a lot of inventory, depending on where you are in this category, you're competing with a bunch of more properties than what you were, say, in 2019. So if you're looking to try to sell your home, it could be a challenge, right? So at that point now it's becoming a strategic game versus just putting signs in the yard and hoping that it's going to sell. Then when we take a look at list price, this is the list to sell price ratio. This is something that is also an indicator of whether or not we're in a buyer market or a seller market. The bigger the differential between list to sell price is an indicator of whether or not we're still in a seller's or buyer's market. In each one of these price categories, in 2019, this up to 400,000 was at a 98% list price ratio. We jumped up to over 100% in 2021, and 2022 was like just under 101%, or was below the rounding error, but it was, a little over 100% in each one of these categories. And then in 2023, we saw it drop to 99, 98, and as of today, we're at a 98% list to sell price ratio. 400 to 800,000 in 2019, we're at a 97%. And now today we're at a 99%. So still, I would consider like very, very healthy market in terms of list to sell. But at the same, then, as we move into 800 to the 1.2, we were at 95. Today we're at 97. In the ultra luxury, we were at 93% in 2019, and we've jumped to a 95%. So obviously we're seeing some performance, which is very similar and very close to where they were in 2021. 400 to 800,000, 1%, 1% drop. I would say, obviously 100% would be great, but it's one of those, like the idea is that it's not too far off the mark. And honestly, we're not too far off the mark, even in the up to 400,000 range. But it was definitely hotter in both of these first two categories in COVID. So, the idea behind all of this is just to kind of give some understanding and some like, I guess, like data reference points to be able to talk about, how the market looks overall. I would say it's definitely a different market, right? Every day it's changing. Your buyer demographic, your buyer profile, there's new buyers in the market every single day, but it's still a market where homes will sell at good pricing, but it's definitely it's requiring you to be more strategic when you have a lot more options out there, say, than where it was 2021, 2022. So we're getting back to what I would consider somewhat of a normalized market. I think people are anticipating interest rates to come down. I don't know if they will or not. I'm assuming at some point they will, but to try to predict it or time it would make it would be foolish. What is going to happen or when it's going to happen is immaterial to the market today. There's people that need to sell. There's still people that need to buy in every given market. And so it's just understanding where you are, what you're doing, what's your price segment, where do you stack up, and at that point, like making sure that you are priced as competitively as possible in order to be able to stand out from the crowd. And when you do, you will be rewarded with a sale price somewhere near or at the list price, as long as that list price is appealing to enough of the buyers that are out there. So it's still going to take an understanding and being able to truly market properties to be able to get them to move, but that there's nothing in any of this data that suggests that the market itself is crumbling, collapsing, or performing outside of like expectations for the most part. Your biggest segment, though, to the up to 400,000 range, to see a 2,500 unit drop off in overall sales in that price category definitely is being able to find affordable housing right now, or at least connecting buyers with affordable properties and helping in that. That's going to be the segment that's going to is going to be the most sensitive. But there's also units are moving into different categories, so it's not the market overall is there, but just understanding that each one of these is gonna perform a little bit different. So what we can do next week is I really want to take a look at the up to $400,000 range. I want to do a little bit more dissection of that specifically within the single family homes. And then we should have the end of July or end of June data, all of that stuff out in the coming weeks. And I want to break down townhomes, mobile homes, and land to kind of give us a better understanding of how those markets move. But hoping that this was helpful. And if you do find value out of this, like I said, please subscribe to our channel. We would love to hear comments or any questions or concerns or other analysis that maybe you're interested in seeing. We've been more than happy to be able to bring that into future topics. So hope you have a great week and stay cool out there. And thanks for tuning in.